Welcome to FXcast. This is our FXcast market analysis for Wednesday, May 11th, 2011. In each of our videos, we try to find high probability trading setups. We'll look at the gold chart and the currency pairs that correlate with it. We'll come up with a low volatility watch list, an inside bar watch list. We'll review the economic calendar, and we'll have an education spotlight at the end. With that, let's go to the charts. Okay, so we're starting off with the gold chart, and you can see for the past couple days here, we've been consolidating around 1509. And when we come over to our hourly chart and our market profile, looking at the volume, we can see that that's kind of where our support's going to be. Our volume support is around 1509. Each time we come down to it, the buyers come in and pull back up. So we say we're watching it stay above the 20. We're watching it stay within this range. Now we did break above, got over to 15.8, but we came right back down. So what we have to watch here is come back over to our daily chart and see that also in the daily chart we have the 20 moving average holding up as support. We have sort of a mat hole pattern here, and also in the daily chart we can see two wicks. We can see a wick right here and a wick right here. So I would say if gold breaks 1520 ish, that is our move to potentially retest the highs. Gold above 1520, 1521. Now, when we compare gold with our other currency pairs, we have the pound dollar. Oh, wait a minute, let's drag it back over. There we go. And we can see that the pound dollar is not as strong, a little bit weak, but it's hanging out here between the 20 and the 50. We also have a little resistance / support, whatever you want to call it, right basically where we are. So for this, we want to wait and see if any trend forms. Certainly longer trend is up, immediate trend is down. I would say actually there's no trend. So we're going to let that one plan out. We'll go over to the Aussie dollar. And this one is matching gold. We can see that. So this one, we also have a couple wicks. Let's pull up the hourly on this one and see what we have. And this is what we talked about yesterday. Once we got above the volume support, volume resistance, we have stayed up there. We've come back into it, but we've always moved up. So that's certainly nice. Coming over to back to the daily. There's this combination of wick here. This is one to watch. I'm probably going to wait because the entry was 2 days ago. The entry was at 1.08. Now I'm going to wait and see for another pullback. And then we have the euro dollar. Also not as strong as gold. Let me pull gold back up. Showing some weakness like the pound dollar. And holding up here with the 50 as support. Now on the daily, we can see this price level that we talked about, and then we also talked about this price level right here. And that's basically where we are. So really, I'm going to sit on my hands and let this pan out. If it breaks above those levels, that'd be great. Retest the highs. Breaks below that level, that'd be great. Below the 50, below the last swing high. So I'm going to sit on hands right now for that one. Real quick, when we pull up the hourly, yeah, a lot of volume in this range that it's in. However, it does look like it's getting above that volume, but I'm still going to sit on hands for right now. Okay, so what we saw in the market yesterday is a bunch of the pairs that we were looking to continue lower have bounced. So now we'll have to see if they're ready to continue on. So the euro franc sideways to down type chart. No real pattern that we're watching here. However, we can see right here two things. First of all, we can see where what will now be resistance but was once support. So we'll put that in right about here. And you can see where we are right now. So we have two things that you can look at. You can look at an aggressive entry above yesterday's wick. Yesterday's wick is 1.2685, 1.2685, to run you up into this support area, or what now is resistance, and a second target being the 20 moving average. This will be a continuation. Will this move continue back up to the 20 moving average? And you know what we talked about before was, look, buyers find value here, so maybe they found value here once again. So we want to see if we can catch the run back up to the 20 moving average. Aggressive entry at yesterday's high, 1.6285, and then that's a run to here, and then to the 20 moving average. Another one that based was the pound franc, and here we have sort of an aggressive entry, again above today or yesterday, however you look at it, the prior session's high, with a run to the 20 moving average. Sorry, just pulling over my crosshairs here. All right, here we go. With a run to the 20 moving average, and our second target to about 1.4526. First target, this is a small one, get us to the 20 moving average. Second target to where all of this resistance is, which will now it's resistance, which was support, maybe even up to 50 moving average if we could break that. So there's three potential targets on that one. And the final one we're going to look at is the dollar yen. And this is another one we're going to say, can this one make a run up to the 20 moving average? Since the move lower didn't happen, we want to see if the run to the 20 moving average will happen. And this one, again, we're looking at a break of the high. You can even, if you want to, wait until 80.97, which is really 81. First target will be the 20 moving average. Second target will be the 50 moving average. We currently do not have anything for our low volatility watch list. Again, this is something you get to check each hour. Our inside bar watch list, we have the Euro franc, the Euro pound, the Euro dollar, and also the dollar franc. And again, what we're doing with those inside bars is you mark the high and the low. And specifically, you want to look for that dual time frame agreement. So in an uptrend, you mark the high and the low, but you really want to try a break of the high. In a downtrend, you mark the high and the low, but you really want to trade a break of the low of the inside bar. With regards to the economic calendar, we have a couple things here for the pound. The merchandise trade, which measures the difference between imports and exports. We also have an inflation report, which typically has a lot to do with the interest rate that they'll be setting. A little bit later down the road, we have the trade balance for the states. Again, another measure of imports and exports. We also have the trade balance for the Canadian. And then a little bit later, we finish off with some Aussie job employment data, letting us know basically whether or not jobs are being created and how healthy the economy is. So we're going to finish our conversation from yesterday about trading plans and talk about why, or specifically what successful and profitable traders do that make them successful, to make them consistent. And that is the first thing. They have a trading plan. They trade for a reason. They trade when the odds are in their favor. They don't trade just because the market's open. They do not trade just to trade. They have a defined set of criteria, and they know that when they follow this criteria, they back tested it, they can have positive expectancy that over a period of time, the odds are in their favor and their wins will outweigh their losses. They know how to cut the losses and let their good trades run. I mean, this is one of the big things you'll see with losing traders. They get in a tick-for-tick battle over losers, and then they get out of winners way too soon. They work as hard when the market is closed as it's open. You've got to prepare. You got to decide what you're going to do each day. That's kind of what our videos are about, to help you prepare and let you determine what side of the market you want to be on. You don't just show up and start trading. You have to prepare. And that helps you create an action plan. Here's the hardest thing that a lot of people do. Emotionals, as far as cutting your losses and letting your profits run, that's hard too. But to sit patiently, again, not trading to trade, but trade to make money. Trade when your setup has been matched. All of that is about having control of your emotions. All of that is about having realistic goals, not hitting a home run every time. You will hit a home run, but you're also going to strike out. You're going to hit a single. You're going to hit a double. You're going to hit a triple. You're going to fly out, strike out, walk, pass, all these things. And you have to be realistic that each time something different can happen. But again, if you have a trading plan that's back tested and proven, you can know over time you're going to be successful. Thanks, guys, and I'll see you next time.